All right, basic housekeeping rules. Everyone should know that by now, right? Well, the advanced guys should know that by now. Um, I actually close, or just rather put everyone on mute to ensure that there aren't any background noises coming in from different people during the course of the session. Sometimes I hear some very weird noises coming from your guys' end. I'm kidding, guys. Probably comes from my end, but there's a lot of background noise and stuff like that. So when we actually put the recording up on the channel, it becomes very, I don't know, but it's not really that audible. So rather just have everyone on mute. If you have a question, you can raise your hand, right? And I'll unmute your mic. You'll be able to speak. And then okay. All right. So as I was saying, before the connection just rudely interrupted me. The connection is very bad today, guys, so I do apologize. But in any case, okay, type your question and I'll be able to read your question out loud and then proceed to answer it as best I can. Or I like to think I have all the answers, but obviously that's not true. So I'll answer it to the best of my knowledge, right? So if I don't know it, if I don't know the answer to it, I'll tell you as well. So last night we did an extensive session regarding risk, right? That 1% rule, right? The 1% rule that the 1% follow. And I'm seeing that a lot of guys are actually watching that particular one because obviously I can see the amount of views and all of that. So, I mean, it is encouraging because I do personally feel like that is the biggest factor towards your success or your failure long term when it comes to trading. Like I said, trading is a long term play, right? It's a marathon, it's not a sprint. And there's no particular destination that you actually get to. There's no finish line where you're like, okay, I've conquered the markets or whatever the case may be. Markets are always constantly changing. You need to adapt. You need to do your research. You need to fine tune your routine and all of that. So, I mean, trading is a never ending endeavor. And therefore, we need to treat it as such, right? It's an infinite game where there is no actual finish line. And so if we take that approach as opposed to the approach where we feel like if I don't make money this week, I am a loser. I mean, it's become very difficult for you to trade when you're under that sort of mentality where you feel like every single trade that you take needs to basically make some money. Right? So when you have that sort of approach or that sort of mentality in the market, it's going to be very difficult for you to execute. Now, we were looking at support and resistance for quite a few sessions. And one of the key things we did support and resistance Bible, part 1, part 2, and I think we also finished up part 3 sometime last week. Okay, but I feel like there should be a part 4 to it. Okay, there should be a part 4 to it because I do feel like I missed one or two things that could be of value to you guys. Okay, so tonight we're just going to be covering that. Now, as you guys know, that I'm not a huge fan of trend lines, okay, simply because of the way in which you can interpret them. Okay, there's so many different interpretations of where the trend line should be that it's very difficult to have sort of like a universal or even for your own self, like a consistent way of looking at the trend line itself and how to plot your trend line. So for example, today I might wake up and say, right, on the USD JPY, this is my trend line. Okay, this was my trend line. Trend line was broken. Market popped just below, came back up, and pop below the trend line again, right? So which means that the trend line was broken. And tomorrow, since it's a Friday, I might wake up and say, oh man, this is the trend line. Okay, I can see clearly that the trend line is still intact. The market bounced off around 108.50 zone and is headed on an upward trajectory. Okay, and on the upside, we might take this area here and be like, okay, this is where our trend line is. Okay, it's right through these pins or these wicks. Or we can take this low over here and sort of like plot it in this way. Okay, parallel to this trend line over here, in which case we sort of like create our own trend channel. Okay, so we'll be looking at shorting when the market hits the high, which is sort of like the resistance of the trend line, and when it tags the low, it's the support of the trend line. So that is the main reason why I don't particularly like to make trading decisions based off that, but you can use trend lines as a way to analyze the market, okay, and come to a conclusion about the directional bias that you could be following for the next day, month, or year regarding the market. So today we're just going to take a brief look at that. So let's just use this USD JPY as an example. Okay. Now we can see that the market has been in somewhat of a trend. Okay, popped below that 105 even zone, 1, 2, 3 taps, right? Extended down to 104.50. Okay, that's about a 50 pip drop, and market never looked back. Right. We've been looking at this one. I don't know for how long, because the market is essentially trading sideways. Okay, I think that was the low of 2017, if I'm not mistaken. No, it's 2018 low, right? So that is 2018 low. Market came in and tagged it sometime last year, and then just headed upwards from that point onwards. Okay, but now if you're looking at the smaller time frames, okay, I know for some people, daily time frame is the highest that they've ever been. They will never look at a weekly or a monthly. But for me, like I always say, I like to have the big picture view. I won't take into consideration all the time frames that I look at, but I'll just have a sense of I'd like to have a sense of what's going on in the higher time frames, and then just link it up to the smaller time frames, even if I am scalping, 20 pips, 30 pips, 50 pips, for example, right? Or even 100 to 200 pip move that I'm looking at. I always look and take into consideration the higher time frames, because that's where you get clarity most of the time. So let's say we plot this on the 4 hour. Okay, let's just do 4 hour. I think we might get more hits than 4 hour. Now, a trend line is like a support or a resistance. Okay, like a support or a resistance. And when price jumps up to those high of that resistance, okay, a lot of the time you'll get a pullback away from that swing high. Okay, and if it's at the swing low level, you will get a pullback just before that swing low, right? So like in this example. So so there's a swing low, boom, tagged our trend line on the low side and came back in, right? Didn't quite swing back below this 108 even zone, but it actually made sort of like an attempt, quote unquote, right, to go back into that zone. Okay, so we went back into that buy zone, because we can see just by the aggressiveness of the move out of 10800 that there was a lot of buying around that area, and therefore we should consider, okay, or we should have an idea, and that the markets could essentially do the same thing, should they return to that same level, right? There should be a fair amount of participants who still believe that the price comes towards that 10800, 108 even zone, that it will go up again, okay? And therefore, obviously, they'll participate in the market with those logs. Now, the trend line, I believe, is not that important whether you put it on the wicks or on the pins, because like I said, some days you'll put it on the wicks and some days you'll put it on the pins, depending on how you see that particular market. Okay, so practical example. Let's take this low over here. So we can see the swing low, October 2019, and there's probably November. Okay, same month over here. Okay, we're looking at the 4 hours, so this is 1 week. So the period separator shows us just 1 week worth of price action. And we have these swing lows going higher, right? See, this swing low was the lowest on the chart. Okay, let me just use pointer tool rather. Okay, this swing low, lowest on the chart. And this one, market just keeps going higher. Just keeps going higher. So logically, what we'd like to do is to take our trend line to help us to see if the trend is still intact. Okay. Now you want to get as many hits as humanly possible, but you have to start from the swing low that originally sort of like started the move. So in this instance, that is the swing low that started the move. So you'd like your trend line to start somewhere around there. Now it could be from this candle over here, which established the low, or this candle that created an extension of that low. Okay, you can see there's two candles over here. Right, this one or this one. So either or. So let's say, for example, right, just for the sake of the example, we use the swing low that established the low. Right, this candle rather that established the low, and that is our trend line. So if the market is still moving above this sort of trend line, we can even throw in a array. Okay, just right click trend line properties and parameters, just click on ray. It's just going to extend by itself. Okay, now let me remove these ones so we know what we're looking at. Now if you are looking at, there's a hit at the low, right? There's another hit, there's another hit, and there's another hit. Now if you look closely, we had the market come back into that swing, into that trend line, right? Reject, right? Pushed up just a bit and then pushed down, broke the trend line, came back in as resistance, and then extended the low, or extended down rather. Okay. Right, let me just replay that again. Swing low was established, right? So let's say this hasn't happened, right? So anything prior to the December, right? Okay, anything that happened after this, we don't consider it. Okay, so let's just say we're only working with this, and we've been looking at the market from this angle, right? We've established a low. This is the second low, so like that support from that trend line. Market bounces off again, rejects at 108.50, rejects again, and swings back up. So we've established that this is a solid trend line because we've had multiple touches on it, and we'd expect the market to come back, right, and sort of like bounce off, right? So we'll be looking to buy if we have solid confirmation that the market